Stock the fuck up. Hey guys, welcome to episode 4 of Stock the Fuck Up. We're so excited to have on the show today Alex Cutler. Hooked up with him on Twitter. You know, it's a really great community that we have on Twitter right now with just overall sharing information, knowledge, and learning from each other. And you guys, anyone listening, I do want to let you guys know that Alex and I are definitely not financial advisors or lawyers, and we are just kind of sharing any knowledge, anecdotes, thoughts that we have on investing because it's such a fascinating journey. Alex, yeah, tell us a little bit about how long it's been since you really started your investing journey because that's what we're all about.
Absolutely, yeah. Thank you again for having me on here.
Of course.
So I started investing around 3.5, 4 years ago now. Main reason being is because at that time I was in the military, and my job in the military was as a data analyst and meteorological forecaster. So I was very accurate in my forecasting, obviously analyzed through data, and always been a financial mindset type of guy, and I've been doing well for myself. And so my uncle told me about, hey, you might as well use your talent that you have and your analyzing skills and go into the stock market and check it out. So I did, and the first year was always a little bit of a headache, but like everybody does when you're not really sure. And then it was kind of a quick.
Awesome, awesome. And just to clarify, just because I know you mentioned it kind of goes back as to when you were in the services, but how old were you exactly when you really decided to take a jump and be like, okay, I'm going to grab this amount of money and just, once I've learned about it, let me go forward.
Well, I started around 25 years old, but like in high school, I was one of people that were doing through accounting and economics. Did college level economics and financial analysis.
So Alex and I kind of stay within the millennial range right now, and we're kind of speaking to that audience because there is a lot of scary steps. And Alex mentioned the taking the economics course in college and kind of really being perhaps riveted by that and diving a little bit deeper. I kind of want to talk a little bit about that today, Alex. I kind of want to talk about that experience that I think everyone had to have in middle school or high school. I'm going to go ahead and say high school, where they're like, okay, guys, economics, you're all mostly seniors or juniors. You're going to learn about the stock market. And I mean, 17, 18, 16, we are not taking this seriously, but they tell us, hey, you have $5,000, make it into 10,000 if you can, or we're going to actually follow these tickers for the next 3 months. Let's see what you guys can do. Did you ever experience anything like that?
I did actually. That was for one of my economics classes. It was primarily for seniors. And so when I was in there, they always kind of push, hey, stay with the blue chips, like stay with the likes of IBM, Intel, you name it, all the like major ones.
Yeah.
And they kind of tell you to kind of stay away from the volatile ones that you're unsure of, because as high schoolers, they don't really teach you to do due diligence, to learn
Hmm.
about a company and figure out what to look at and to see how they're growing. So I tried my best, and truthfully, we all really failed. We didn't hit $10,000. We didn't double our money, but
Right.
some of us did well. Some of us made like $2,000. But it
Yeah.
is what it is.
Yeah. I was reading an article in New York Times in one of our previous episodes that actually said that our school system doesn't really prepare us for investment, for really preparing for our future, for any sort of early retirement dream. But ironically, for the most part, all of my friends or anyone that I've asked within our age range, they've had this sort of assignment. So, what are they actually teaching us? That we're going to fail, that it's hard, that it's overwhelming? If anything, this one assignment, similar to that taking care of a robotic baby for a weekend assignment, somehow teaches us to just be afraid of this adulthood stage.
I agree. That especially nowadays when money and the value of money is hyperinflation, basically losing value in the dollar now. I think that if anything, high schoolers should be learning economics and finance, like financial analyzing, um, like as mandatory. Like I get it,
Mm-hmm.
mathematics, the basic mathematics is important. I understand that, but all these
Mm-hmm.
other extra things, they're really not preparing anybody. And when kids go through college, they're going to be coming out with massive debt, and they're going to have to try to pay that off as
Oh
much as
yeah.
possible. Which even my teacher, that's an accounting teacher, she didn't pay it off, and she was 38 years old. I felt so bad for her.
Yeah, no, I totally agree. I do want to talk a little bit about what I did hear when my economics teacher spoke. He said, Okay, so fundamentally, try to follow the seasons. And he gave us two examples. He's like, summertime vacation, go for the big parks. Like, for instance, me and my family, we are invested in Disney right now, and we always make a profit, especially over after the summer vacation. It's just high volume. And then, if you guys want to do something small, think about it. Easter, Hershey's, ticker is HSY. Just go for it. See if that turns around during the spring because everyone's buying those damn chocolates. And he was so sure. Do you believe in that sort of like, let's follow the annual year and what is naturally voluminous, and what's naturally moving because of what's happening in the world or in your some, or do you kind of believe more like, hey, I'm going with the earning season and I'm gonna keep track of that's the season that I want to stick to.
I would actually like to, if I was to go back in my early 20s, I would tell myself to focus on the companies that were rapidly growing and things
Mm-hmm.
that were like quarterlies. How are they growing? I
Mm-hmm.
understand the seasonal. Seasonals are more for long-term swing traders,
Mm-hmm. Mm-hmm.
but and that works. You kind of use both hand in hand. But my portfolio, I would tell people to make a majority of it, like 75% of it, long-term rapid growth investments. Try to have a baseline of how much you want to hold for that stock. And if you have the ability to double that, that way you can kind of do a bracket order as it continues to grow. You can chunk it off and rotate it into another company.
I totally agree about kind of splitting it also, between some of these long term. I don't want to call them sure things, but it's just there's some companies out there that we know they're not going anywhere anytime soon, and
Hmm.
um, and splitting it up, and also just taking a little bit of a risk. During the pandemic, it has been a really interesting season. A lot of storage units companies. That's kind of what I looked at. I'm like, man, people are moving. People are moving. People are just changing their life, and I came across some really lucky stocks. Like, it seems that Alex does agree also, guys, with Michael Tanney, a director of Magnus Financial Group in New York. He says market timing does not work. As long as you believe in capitalism, every bear market has historically given way to a bull market. No one can predict the timing of these moments, and you will likely do more harm than good by trying to navigate your way through them by trading or listening to your advisor who thinks he or she knows when the right time is.
We're in an era where people don't really care about a company. It doesn't matter. We don't care to grow with them. And I understand that. They're all about the instant profits. And
Mm-hmm.
even companies that have good earnings, they have a good EPS, they have growth in revenue, they have higher EBITDA. Doesn't matter. The stock all of a sudden just drops like a rock. It's because in the we're in the era of the AMCs. We're in the era of the GMEs. We want squeezes. We want to make 300% instantaneously, and that's good and all. But that's also coming from people that are just following trading groups and
That's
instant
true.
alerts. I'd rather people follow the likes of you, me, and many others that are trying to educate the traders and investors to make them more independent and less reliant on others and potentially get them into better situations than potentially FOMOing and losing 20-30% of their portfolio.
They're not looking at that. Who's the leadership? Who's the team leading this company? What are their backgrounds? What has this company done in the past 5 years? Let me look at their charts in the past 5 years, because if this is just fluctuating, sporadically, this is probably not the safest bet. Um, and it's been really interesting. There's lots of leaders out there that are just like, what do we do? Is it do we need influencers? Do we need, you know, what do we need to do to kind of keep up?
Yeah, I agree. And the thing is that investors as well as the leadership of companies need to understand to kind of go back to the basics at times, but take advantage of the current digital era that we are in. Yes, stick to the technicals, stick to the fundamentals. You can play both, and it makes you a more accurate investor and day trader, swing trader, and you can make money in both ends as a long-term investor as well as a day trader. But for companies, they need to kind of take advantage of the digital era that we're in. There's free marketing across the whole board. We're seeing SoFi push out marketing schemes with TikTok, which they got over 1 billion views. That's
Mm-hmm.
free marketing right there. Which, if they wanted that kind of type of view on, like as commercials, they'd be forking out hundreds of millions of dollars just to get that airtime.
Right.
So to be able to take advantage of that digital era and people looking at their phones almost 8 hours of the whole day, which is quite insane, um, you got to just take advantage of what it is. But I I wouldn't want a CEO that I'm invested in to focus on, hey, let's play the memes, let's
Mm-hmm.
focus on them and let them be a
100%.
part of it,
Yeah.
because it's really not going to provide you any good foundation.
100%. You're just going to get um, a pump and dump crowd. And that's really
Yep.
what, it's dangerous. Dangerous for the company. It's dangerous for those who are investing. And it's how you can, yeah, you can earn a crap ton of money and you can also lose a crap ton of money. So, with that said, guys, personally, we just mentioned how to follow like annual and seasonally. But what about earnings season? Now, according to Forbes magazine, earnings season is a period when public traded companies release their most recent quarterly financial information in a report called Form 10Q. We can mention a little bit more about Form 10Q, guys, and maybe some of our investing terms episodes, but we're just going to continue on with the quote. During this time, many companies also host conference calls to discuss the results and field questions from analysts on Wall Street. Um, so that's kind of the season that I think we're talking about a bit more. The due diligence that Alex mentioned, just really following a company, really, really doing your homework, and being like, okay, well, this is where I'm going to put a few of my dollars.
If I was someone that was starting with $1,000, I would tell people is to focus on your mental stress and not to diversify too much. You want to be able to, before you even buy a stock, look at the company, look at the last quarterly earnings. Have they increased their guidance? Have they been beating out earnings? What's the current valuation? Look at the peers. See how the multiples are moving on the peers as well. Like how are they trading valuation wise compared to the revenue? Then look at the company as well that you're looking at and see how they are in retrospect comparison to them.
So, yeah, thank you so much, Alex, for this. This is such an awesome episode, and I'm gonna jump right into post production. If you have any last words.
No, thank you so much for having me, guys. And I want to say that every single one of you guys that are listening, make sure to like, make sure to subscribe to Stock. And the biggest thing is that you should always try to educate yourself as an investor and trader. Become more independent. Don't rely on everyone just
100%.
to be. Yeah, just always try to learn and grow as an investor every single day.
100% awesome. Thank you so much, Alex, and we'll see you guys next time.